Welcome to 360 Net Worth with David Disraeli. And let's talk about your book real quick. And then I got to know something about this, a stash of tax-free cash. I'm interested. But first, your book is called?
The book is called Stock Joker. This is my second book that I've written, and I'm almost done with it. It's going to have a lot of really good information that you can't find anywhere else. But I call it Stock Joker because the subtitle is the advice you get is either incomplete, biased, or just flat wrong. That's based on 35 years of experience and making observations about what other people are saying.
Okay.
So, yeah, I'm excited about that. But
you should be congratulated. Taking on that task is a Herculean effort to write a book.
It is.
It very much is.
Getting close to the end.
Good for you. Let's move on to this creating a stash of tax-free, keyword, cash.
There are two tax systems in the United States. Some people would think, yeah, one for the rich and one for everybody else.
That's what comes to mind for me at first. It seems like there's two sets of rules for that group of people.
No, there's one system for the informed. There's another system for the uninformed.
You see, information is power.
It is, exactly. And it's up to you to find out, because you'll notice that people come to your door and solicit you, but the IRS doesn't send missionaries out to preach the gospel of how to pay them less.
Right.
Mr. and Mrs. Disraeli, let's have a seat for a few minutes and talk about filing your taxes and paying less income tax to us. You have to figure it out. So we have two types of taxes that we pay. We have voluntary taxes and we have involuntary taxes. And let me explain the difference. The significance of this is that at the end of your working life, or if you ever need to make a major purchase, you're going to take money from one of two places. You're going to take it from a taxable place, or like selling a stock and paying capital gain, withdrawing it from an IRA or 401k, or you're going to take it from a place where there is no tax. And then in retirement, you're going to have either taxable income coming to you or tax-free income. And the reason this is so important is because nobody can tell us when you retire what Congress says you get to spend, because you only spend what they don't take. Right?
Well put.
So of all the variables, how long you work, how much you invest, what your returns are, the largest variable is income tax. And yet it's the one you have zero control over. Now, if you have a bucket of tax-free cash, then it doesn't matter, does it? So let's talk about voluntary and involuntary. Involuntary is if you get a W-2 from your employer, they're going to withhold income taxes, and there's nothing you can do about it because it's the law. It's involuntarily taken from you. If you're self-employed, there are voluntary components and involuntary components. Okay, for example, since I'm self-employed, I can deduct business meals, I can deduct my computer, I can deduct this studio time, I can deduct my internet, my cell phone. The average person can't do that. So I pay less tax on the same amount of effort than they do, okay? Because I chose to have my own business. Now, a person that's getting W-2 income can't do that, but they can start a side business, or what they call a side hustle, and file what's called Schedule C. Let's say that one day you pay your house off, and you say, honey, I want to go on a cruise to Europe, and it's going to cost $30,000. You can take that from two places. You can take it from your IRA account, because now you're old enough, or you can take it out of your house. How? By using something called a home equity line of credit, or doing what's called a cash out refi. If you take $30,000 out of your house, what does the IRS get? Zero.
Zero, yeah.
Because a loan, now some people may think, well, I'm not borrowing against my house. I'm just giving you an example. There's dozens of examples. There's three ways you can create a stash of tax-free cash. Number one is real estate equity, because the equity you can borrow out or transfer with no income tax. You can literally spend it, and the IRS has no say about it at all. A Roth IRA, which is not available to everybody because of the income limits. It's probably going away completely with all the different changes that this administration wants to create, especially on high income earners. The last is life insurance cash value. And this is an ignored asset class. Asset class means stocks, bonds, cash, gold, real estate. Life insurance cash values are very, very different from any other investment because they're backed by an insurance company. And unlike banks. They don't lend money to people that want to buy a car, buy a house, buy a boat, or issue credit cards. They make $25 million investments in real estate mortgages, and so forth at one time. If you go to your bank and all of your friends go to the bank at the same time and say, I want my money, what would happen?
The bank could have a problem.
They can't give it to you because it's not there. That's why they have FDIC insurance, so that you will put your money in the bank. On the other hand, if everybody goes to their insurance company and says, I want to cash in my policy, the money's there. Now, they may have to make some changes. If there was a panic, it might take a couple of weeks, but the money is actually there.
But don't you lose some money if you take it, if you cash it out early?
Early, you would, yes.
And what is early? I don't.
On average, there's surrender charges and there's loads and upfront costs. It normally takes about 9 years to break even. However, over time, the cash value inside the average life insurance policy, I'm not going to promote a product or a company on this podcast, but on average, you're going to get between 3 and 4, maybe more, % per year with no market risk and no income tax.
Can you use that the value of the policy to secure a loan?
You can.
If you needed.
That's a great question. Yes, banks will actually collateralize an insurance policy.
They will. Okay.
Because
for its cash value.
It's like gold. It's solid.
But for its surrender value.
Right. Exactly.
Okay. All right.
So once you're past the surrender period, the cash value you can take as a loan from the company. If you do that, they'll pay less interest and less dividends, or you can find a cheaper place, maybe through your bank. So that's a fantastic question.
Okay, I was wondering that, and it made me think of it when you were talking about. Sometimes it might be better to get a loan than the cash value because of the interest charge versus the load charges, surrender fees, all that stuff. I don't know the numbers.
Did you sell insurance?
No, I never have.
Oh, okay.
No.
Sounds like you know a lot about it.
I know. I've never sold insurance.
Okay. Yeah, you're using a lot of industry terminology, but there's loads surrender fees that you have to be aware of and get past. But having done this as long as I have, I've seen people with what's called paid up insurance policies. That means they're not paying premiums.
Right.
It just continues growing. And the thing about it is, you may not need the life insurance. You may just want the tax benefits, but somebody someday is going to receive the benefit from that.
Sure.
Unlike a term policy, which is going to expire.
Right.
In fact, over 90% of term policies don't pay out.
The actuaries know that.
They
That's
know
why
that.
they have them.
That's right. And
They're
that's
betting
why
you're not going to die.
That's why it's cheap.
Yeah.
Whole life is permanent. It's here to stay. It's like an anchor in the ground that is not movable.
Right.
And there's not too many investments you can say that about. So just to review, there's 3 ways that if somebody knows of a 4th way, please contact me. I've never found the 4th one. But the Roth is probably not here for long, especially the Roth conversions, where you can actually take money out without any income tax, and you can generate income in retirement without income tax. So it's a hedge. We talked earlier in our past segment about a hedge against inflation or the market dropping. This is a hedge against Congress changing the rules.
Right.
As a matter of fact, when people list 401k balance, think about this for a minute. You've seen credit applications. It says IRA balance, cash balance, mutual funds. Right. Well, if you put $100,000 for your IRA balance, that's actually fraud. Because if you have $100,000 in an IRA, a regular, not a Roth, a regular IRA, can you get the whole 100? No, you can only get about 70% of it because you got an interest-free loan from the IRS. Who's happy to let you invest their money for the rest of your life for them. But let me ask you a question. Sandy, if you were to start a business with somebody that says, okay, I'll put up the money, you put up the effort, and you get 70% of the profits and I get 30. But at any point in the future, I can just decide I'm going to change it to 30-70. Would you go into business with me?
No.
Of course not.
No.
That's what we've all done.
Right.
And with employer matching and all the different mutual funds we can invest in, people are pouring trillions, not billions, of dollars into retirement plans without knowing or having a clue how much the IRS actually will get, or if they're going to now tax their Social Security if you make too much, or they're going to charge you a higher Medicare premium, which is another surcharge, or if you don't qualify for zero capital gains tax. So your AGI, which the IRA increases, controls a whole lot of things that are going to happen in retirement when you can't go back to work and pump up the income to to replace what the IRS is taking from you. So the solution is to have 2 buckets and to focus more on that tax-free bucket than on the taxable bucket, because you probably need both, actually.
Sure.
So
Good
that's
stuff.
pretty much what I had to say.
Good stuff. I mean, again,
Thanks.
learn something new every day. And if people wanted to reach out and get in contact with you, the best way to do it is to your website or your phone number. Yes.
The slide that is on the screen right now is going to show the website, which is www.360networth.com. That's the name of the company. And my phone number, which is 512-464-1110. And for any tax consulting or financial consulting clients, we offer a 1-hour free consultation. We give a lot of information, and they can ask whatever questions they want without any commitment at all. So I would encourage you, if you have any questions, give us a call, set an appointment. We can do it virtually. We can do it over the phone. We can do it in person.
David, good seeing you.
Thanks.